Welcome everybody to the daily recap show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks were mixed on Wednesday as the market remained unsettled by US-China trade tensions amid hopes for interest rate cuts and strong results from Wall Street banks. And today we saw a bit of a flippening. Yesterday we saw some of the mega caps take it on the chin. Today we saw quite the opposite. Google and Meta sort of led the mega caps higher, both up 1 and 1.8% respectively. The broader semiconductor market was actually very, very bullish. Hardware as well as software, ABGO, AMD, MU, Intel, and Nvidia are pretty much flat today, so we are seeing a bit of a rotation into the broader semiconductor theme. Apple was up 0.75% after the release of its new M5 chip. Oracle was up 1.67%, but infrastructure a bit red today with Microsoft kind of flat. Tesla gained, Amazon fell, and then the rest of the market was very, very mixed. You could see some of the money center banks were winners. Insurance, a big loser here after PGR's results. And that was the theme of today. It was just a mixed day through and through, led by the mega caps. And they were up. You could see right here, the mega caps, XLK, right, XLC, XLU, the utility names, they were up 1%. Real estate, the best performer, fun fact, up 1.56%, with the S&P 500 gaining 0.42% and the RTY gaining 0.52%. We also saw staples, discretionary, and healthcare in the fold. And then sectors that lost today were financials, energy, materials, and industrials. Through and through, it wasn't a super bullish day, but it wasn't a bearish day either. We saw large caps, mid caps, small caps gain across the board in all factors, value, core, and growth. And this really stems off, I think, some major comments we got from Jerome Scott Bessent. He insisted that the US will not change its negotiating stance on China due to stock market volatility. Bessent also pushed back on a report in the Wall Street Journal overnight that Chinese President Xi is betting the US economy can't absorb a prolonged trade conflict. I always thought that report was a bit of bogus, but here's the thing. Scott Bessent said, if pain comes, pain will come, but we need to normalize trade with China. On positive news, Scott Bessent did come out and say they're close to finalizing a deal with South Korea. And that was pretty much all the news there was today. We didn't get much economic data because of the government shutdown. And ultimately, what really moved market today was AMD. It continued to rally from yesterday after signing a deal with Oracle for 50,000 GPUs. And on the back of that, we saw a lot of upgrades. HSBC, Frank Lee came out, raised its price target to 310 from 185. Dan Ives from Wedbush raised their target to 270. JP Morgan raised their price target to $290 per share. And that is why AMD was leading the pack today, up 8.82%. We also got earnings. Bank of America posted a 23% jump in net income, becoming the largest big US bank to benefit from this summer's bonanza of big deals on Wall Street. Morgan Stanley saw its profits up 45% in what the CEO hailed as an outstanding quarter. Morgan Stanley was up 4.91%. Bank of America was up 4% on the day as well. Very, very solid results from all of the banks, the big banks. Stellar quarter so far. And so far, it's early in earnings season, but things have been very, very good. We're looking for about 7.4% earnings growth. That is the expectation. And we're printing about 9.6% at the moment. Very, very solid stuff. So, the beats continue here in the third quarter, and this will obviously propel stocks higher, guys. And then for everything we saw today, there was 3,500 advances, 2,800 decliners. We saw net outflows in the NASDAQ and the New York Stock Exchange. The S&P 500 marginally up, and market momentum remains the same as it was yesterday. We did see mild improvements in some of these longer term moving averages. The 5-day, we saw a massive improvement right here, and we're still below the 50% mark in the 20 and 50 days. So the medium term averages not looking that great, but the shorter term and longer term averages looking really, really good, and telling us ultimately any dip we do get in the market is simply a buying opportunity, especially longer term. Now, looking at the markets as a whole, another positive day, another day led by small caps, led by mid caps. Look at the RTY, up just shy of 1%, but large caps also in the fold. The S&P 500 also up there. Look at the S&P 600, up 0.75%. So very solid day. The equal weight was up, but not as much as the rest of the market. So really today was, smaller names, larger names, really, really outperforming, but growth and value on solid footing. We saw the international markets gain, excluding the Middle East, but Europe gained, China gained, India gained. In fact, China and India were very, very positive. Cryptocurrency did take it on the chin right here. Bitcoin down 1.6%, Ethereum below the 4,000 mark. That's not what you want to see at the 3.2% down for the day. Volatility did tick down. We saw yields tick up as well. The dollar fell, looking a little bit weak. And as a result of what we saw with yields, TLT was down 0.31%. And then gold and silver continue to rally. You know, gold is up 60% for this year. And look, the rally in gold, it's not even like a joke anymore. It's actually becoming mildly concerning. And the RSIs on these names are looking absolutely crazy. We'll talk about them a little bit later on. But the S&P 500, when we look at the week, you can see slightly green for the week right here, right? But nothing too crazy, trading inside the range that we saw pretty much last week. If we go to the daily chart, we just zoom in just a little bit here, you can actually see that we've had quite a volatile day. I mean, look at the wick at the top here. Look at the wick at the bottom. So we had a massive gap up and go from yesterday. We actually traded significantly higher in the S&P 500, but a lot of volatility. In fact, if we go to the one-day chart, you can see here, like we gapped up, right? So we gapped up, then we actually traded higher, and then we actually came all the way down, making a low of the day. And now we're trading up 0.5 percentage point for the day here in the S&P 500. So a lot of volatility, both the bulls and bears wanting a piece of the price action. The bulls definitely winning. As you can see, it is a green day, and we almost touched the highs at the wick highs here from Friday. So very, very interesting trade. Definitely a win for the bulls, but this type of volatility definitely can bring massive market swings. But when you do get volatility, the second you get on a trend, right, you know, the market tends to trend in that direction. It could be to the upside and the downside. Ultimately, I am still advocating buying dips in this market. If the market continues to dip, which I do think is healthy, I would say buy those dips. The Nasdaq 100, exactly the same thing, volatile as well, but the range not quite as wide as the S&P 500. The RTY, that's another all-time high if we close here. Guys, very, very solid momentum. I think small caps are about to break out. If we go on the weekly chart, right, and we just start to zoom out and we just sort of put like a line right here, this does start to look like a technical breakout. This was the 2021 all-time high right here. You can see we touched it again in late 2024, early 2025, and now we are breaking above. And from here, the RTY is literally in price discovery, and I wouldn't even rule out a 3,000 Russell 2000 in the upcoming months. Absolutely crazy stuff what we're seeing in small caps, and that is boosted by rate cuts. You know, a lot of these smaller companies have floating rate debt, shorter term dated debt, and that rate cut simply just help those, like it improves margins, decreases debt cost. Very, very solid momentum and a very, very good time for small cap stocks. And that's why I say you should be allocated a little bit in your portfolio, whether it's to the equal weight, the Russell 2000, the S&P 400 or S&P 600. These are great ETFs to hold in your portfolio to take advantage of fantastic US small cap and mid cap stocks. Internationally, Europe just keeps moving higher. You can see we are here in the verge of a technical breakout, retesting these highs right here, this trend line. Probably even move this trend line a little bit higher. You can see now we're moving higher from there. And ultimately, this is an all-time high, you know, that we made just last week here in European stocks. And I think this probably trades something like this into the end of the year. European stocks have been very, very solid this year. Looking at Middle Eastern stocks, you know, sort of trading at its highs as well. It probably just continue to move higher. When we look at China, right, China is looking a little bit sick right here. I probably think we're just going to trade sideways for the next couple of months until this trade negotiation is sorted out. I don't know how long that's going to take, but expect sideways momentum in Chinese stocks until that happens. And when we look at India, right, not much is happening, sort of trading inside this very, very wide range. If we break out, we may go ahead and test some of these highs that we saw earlier on in the year. Looking at Bitcoin, we hold the 109,000 area. As long as we hold that, I am constructively bullish on Bitcoin. Below, that's where things get a little bit of a mess. We don't want that. Let's hold the $109,000 bears. This is where you want to step in right now. Ethereum just above the 4,000 mark, as you can see right here. It's trading inside this trend line. I do think that if we go ahead and actually like move down, as long as we hold this line, it should be fine for Ethereum, and then we can make our way here. But you know, the price action right here we're seeing is not really constructive, especially because we're putting in a high, lower high, lower high, lower high. If the context is also making lower highs, we're definitely in a downtrend. And ultimately, unless we want to break this trend, right, we have to go above, break above, use it as support, which we haven't done yet, and then continue the move higher but I am still bullish on Ethereum as a whole. The best way to play this is through BMNR. I do think this is a $100 stock in 2023. Very short trading life, as you can see right here, but ultimately I think $7 by the end of the year, $100 by the end of 2026 is on the cards for these names. So guys, that's how I see the market right now. Ultimately, a very, very bullish day, right? Despite the government shutdown. And I do think ultimately equities are poised to go higher, but do have cash ready for a dip. I do think a dip can come at any moment, especially if US trade negotiations continue to be strained. However, if we do get a trade deal at any point, we get a trade deal, we see Chinese stocks rip, and we might actually see US stocks rip on the back of that, just because that worry is now dissolved. And diving into sentiment, this is the fear and greed index. And you can see we are still in fear when we hit the 40 mark. 40 to 60 is when we get into the neutral zone. So we are very close to pushing into the neutral zone, coming out of the fear zone where we have been over the last couple of days. And this was simply a great dip buying opportunity because equity markets have been bullish and the bullish momentum continues. In fact, the S&P 500 has gone nearly 100 days without a pullback. And generally speaking, when you see that, we go on these massive long streaks. And generally speaking, guys, momentum brings momentum. That being said, if we do get a 5% pullback, buy that dip. Why? Simply because S&P 500 earnings growth is stellar. If you look at the second quarter, right here, 2025, we were expecting 4.8% earnings growth. What did we get? 12%. We're expecting 8% this quarter, or just under 8%. And it looks like the estimates right now are coming at 9.6%. So it's going to be another quarter of record earnings growth, solid year-over-year growth. And what we're seeing this quarter is that typically analysts would actually cut their price by 3 to 4% leading into earnings, but estimates have actually flatlined, as you can see right here. Now, bears will worry that the bar is too high, but in the absence of downward revisions, as you guys can see right here, this is historically bullish. Since 2001, the median S&P 500 EPS beat after estimates were flat to up was 5% versus when they were cut 3%. So all in all, it may look bearish. The data tells us it normally isn't. Now, when we look at the macro, we covered this yesterday, Q3 GDP estimates sitting at about 3.8%. That's not recessionary. Tax receipts looking really strong. The economy is firing on all cylinders. We had bank earnings yesterday. It continues today and tomorrow. Thursday, though, tomorrow we get TSMC, but we get Schwab, US Bancorp. The majority of the big names are behind us, and so far, bank earnings have been great. Goldman Sachs, Wells Fargo, BlackRock, JP Morgan, everything has been absolutely solid. With regards to data, building permits, housing starts, we got that on the block on Friday, PPI, CPI as well, guys. But we'll see if we get that data with this government shutdown. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Cheers.